it's been the talk of the town for a few days. The public offer for Ellah Lakes PLC. They have announced the closing of the offer. Just to give folks a background, it's $235 billion public offer trying to raise capital. Opened November the 10th of last year. It was supposed to close December 5th. I think it was extended to the 19th. Didn't meet the minimum threshold. No shares were allotted. The company did put that out in a statement and said that for those that have invested, that refunds will be made. We're happy to have Chuka Mordi, Chief Executive Officer of Ellah Lakes PLC, joining us to discuss this and the aftermath. Chuka, Happy New Year. Thanks for joining us. Have a seat. I want to commend you. Thanks for coming on. There's been a lot of chatter around this offer and the aftermath and everything. So thank you, Chuka, for joining us. I appreciate that. Thank you. So let's get into the weeds. Now, so the offer did not meet the threshold. I mean, that's the message investors are sending, right? What was your interpretation of that message that investors, how did you interpret what the sentiment or reaction to it?
I think it's less a message investors are sending than an understanding of the nature of the market and the depth of the retail market at the present time. Yeah. We probably overestimated the size of the retail market, I think, and the threshold is fairly high. It's 50%. So if we had had a lower number we were trying to raise, we probably would have scaled through. But from our perspective, it's not a major problem. Refunds being made already to shareholders, to investors, not shareholders, sorry. Yeah. So by Monday, Tuesday, they should be completed, and all the money in the receiving bank should be sent back to shareholders. Yeah. But in the past, this is the first time we've done a public offer of this nature. All the fundraising we've done has always been debt, which we converted to equity. So we've had directors' loans, and all our major shareholders have come in via extending debt to the company and having it converted to equity later on. So that's the route we're going to go down. The actual amount we required for the acquisition was much lower than 235. So that's what we're just focused on. And then once we execute that, we can move forward.
So why? Okay. So well, if the actual amount for the acquisition is less than the 235, then why was it aiming for these
a variety of things?
Yeah.
No, I wouldn't say that. I mean, we had a prospectus, so I think the prospectus was very clear on what we were doing. Yeah. We'd factored in OPEX for the next couple of years. We'd factored in a variety of things, the CAPEX over the next 2 years. So it was a long-term raise as much equity as we could at the present time in order to have a significant equity buffer to cover the next 2 years. But we didn't do that as we wanted to, but it doesn't stop us from at least fulfilling our short-term objectives, which we actually aim to do. So
you're saying it's just an overestimation on your part in terms of where you're trying to get to?
To a large degree, yes.
Okay,
yes.
So now I do want to take an excerpt from your FAQ, because you did put out, a person, you did put out an FAQ, right?
Yeah, of course.
So you said retail participation was lower than projected, and certain institutional investors operate to the internal investment policies that require a demonstrated dividend track record prior to investment, right? You continued in there saying that Ellah Lakes expects to establish its dividend track record within the next 12 months, which may broaden institutional participation in future capital raising. Now, the thing is this, though. When in your prospectus, you actually put out your equity, right? Share capital and reserves. And you'll see there that retained earnings, it's minus 5.6 billion. So your retained earnings are negative, and that's as a result of accumulated losses. How do you plan on paying dividends over the next 12 months?
So two things, and I think from an accounting perspective, it's important to understand.
Please help me.
When people say losses and how these crystallize. Yeah. So, in terms of specifically what we're doing, oil palm, you plant and use a seedling. It takes 4 years from germination to actually producing anything, fresh fruit bunches. So in your first 5 years, you're doing your land clearing, your land preparation, and then you're doing your fertilizer application, and you're waiting until you have enough fresh fruit bunches to process into crude palm oil, CPO. We started planting in 2021. We took over Ellah Lakes. We reversed into the Ellah Lakes shell, which was insolvent at the end of 2019 and completed in 2020. Yeah. So over the 4 to 5 year period, we were investing without any returns, because that's what you have to do to get to fruition of an oil palm company. Yeah. So we installed our mill last year. We have started producing palm oil, CPO, finally, after 4 years, which is the standard period. And I think I always point people to, historically, what has happened in the industry. You don't just start producing profits overnight. And I remember in our very first AGM, and I said to my shareholders, anyone who expected profits or dividends inside the first 4 years, please sell your shares. Right. I said that 4 years ago, sell your shares, this is not the company for you. And no one was going to see any kind of profit or any kind of cash flow for the first 4 years. So I think we've demonstrated that. Last results, we finally showed that we are now making money with cash flow positive. Yeah. And I think it's very important to outline these things, because people say, oh, you've been making losses, Yes, we've been spending money in capital expenditure and operating expenditure in order to build a company that finally starts to get cash flow positive and then starts to produce enough sufficient revenues to pay dividends over the coming years. And I always tell people, everyone says, oh, well, how can we not like Presco yet? And I say, well, Presco listed at 4 naira. I mean, everyone looks at Presco at over 2,000 naira now, or looks at Akomu at the share prices now. But they've been going for the last 10, 15, 20 years, and it takes time to get there. So in the first 4 years, you saw no cash flow, no revenues, nothing, because that's what it takes to build a proper company. And in relation to what we said about dividends and institutional shareholders, so the pension funds cannot participate in what we're doing because they require a dividend history of at least 2 separate dividends. Right. And what we said was forward-looking. We intend to pay dividends. Now we have cash flow. Once we start producing profits, we will pay dividends, because then it encourages institutional shareholders. True. So I wanted to address the question of when people say losses. It's important from an accounting perspective to understand what we've been doing.
There's a lot of people watching. They're looking forward to this interview. I want to give you as much of a chance to just express yourself and reassure shareholders. The thing is, though, are you sure you're not putting yourself in a box? Because if you as you said now, will investors not hold you to that if you don't pay dividends in 12 months?
Of course they should. Yeah. I think it's important to make categorical statements about what we intend to do and what we have the capacity to do. Yeah. And I think there are a lot of issues that need to be addressed in terms of the questions people have, which is why we have the FAQ. Because I think there are a lot of bloggers out there and people who make a lot of comments that I think, if you're a shareholder, they are legitimate questions, and I think if people ask legitimate questions, they should be answered. I don't have a problem with dealing with legitimate questions. Gotcha. So, I mean, you brought up the issue of, say, SEC, and people have asked, why SEC gave permission to raise such a large amount of money. Okay. And I think how much companies raise has no relationship to it's a function of what you're trying to do. Yeah. It was acquisition-based finance. So if you're trying to buy X, what you do is you raise X. So when people say you don't have the cash flow to support what you're doing, I think the very simple answer is, if you read the prospectus, which is fairly straightforward. Yeah, you would see everything in there. So I think just to address that, it's important to go back and read the literature.
Okay, so the thing is, though, going back to the finance, I want to ask you about the amount of equity in the company, right? Yeah. So if we go back there, so if you take, you've got share capital 1.9 billion, share premium 8.2, deposit for shares 2.4, the retained earnings at minus 5.6, all that reason. The revaluation surplus, right? And maybe we need to explain this.
I can talk through all of them.
Perfect. So I think what I want you to start with is the fact that your revaluation surplus, and if you want to help our viewers, is basically revalue your assets, your land, right? So if it's this value, you can reevaluate it and it goes up. It makes up about 60% or so of your total equity. So help me, because that is a worry for.
Okay. I think when Ellah Lakes started, we reversed into a shell. Ellah Lakes PLC was an insolvent company on the Nigerian Stock Exchange with zero. What we brought in was land, which we had in Edo State. Subsequently, from just bare land and nothing, we had 2,400 hectares of land in Edo State. We've added 5,000 hectares of land in Ondo State. We've done the deal in Enugu State with Ado Rice. So we have from the start, from zero, we have over 10,000 hectares of land on our balance sheets that we own already. Okay. There's a value to that. So when it says revaluation, you go from zero, you have to do your audit, do a valuation, and then put it on your balance sheet. I think, I'm glad you put up a picture of our mill when we had the stockbrokers visit our facility a while ago, because a lot of people didn't realize we've actually planted, we have a nursery with over 60,000 seedlings. We've built a mill, a crude processing mill. We're putting our...
You mentioned that the last time you were on the show about the whole acquisition.
So when I say, we've only taken of all the debt facilities we've taken, I mean, I'm glad you're showing our
that's
facility.
The facility.
So of all the debt facilities we've taken, everything has been converted to equity. So we've taken billions in debt over the last 4 years, and that's why we have a diversified shareholder base, because we've converted that into equity. The only debt we have on our books was a CBN loan of just over 900 million naira taken under the CAX facility, which is what we used to build the mill. And we've almost repaid that. That came through FCMB. So we almost paid that down fully. And now we have cash flow. We should pay that off in the next 12 months.
But you get my question and my worry, right? Because the revaluation gains they're on paper, right? It's not. Oh, good. Help me. Look, feel free to correct me, because it's.
I think it's interesting when people say gains. We're not saying this is cash we can pay out. It's simply there was a value of the company at zero.
Right.
You've brought X, Y, Z onto the balance sheet. So what you do from an accounting perspective is, what is the value of what you brought onto the balance sheet? So if you have 2,000 hectares of bare land, it's probably not worth very much. If you have 2,000 hectares of bare land you've now planted on, it now has biological assets that are yielding fresh fruit bunches, and then you've plonked $1 billion naira asset of a crude processing facility that now generates revenue. You have a value to that, and you have an audit process. We have auditors, and I think it was very important to go through the public offer process. We had to go through an audit process. We had to go through a valuation process, and I mean that's the point of having a prospectus, that we had everything in the prospectus.
So as far as if I ask you now about the strategy to actually raise equity in the company, it can't continue to be debt conversion to equity, right? Do you have any other avenues?
There are a variety of financial structures one can employ, and I think the public offer and just straight equity was just one. There are a variety of options we're exploring in the very, very short to medium term, which we've used in the past. MES financing, convertibles. We've done convertibles historically in the past, and that's what we've always used, just not at the scale we envisage. So I think, Nigeria is mature enough, or the Nigerian financial space is mature enough for, I think, a variety of financial instruments which have been employed over the last couple of years for our financing. So,
but I think the issue is that putting that against you coming out admittedly and saying this is a business that is time consuming. I guess for investors, they want to know how soon that's going to happen, when you've historically already said this is going to take time for this this to be realized. That's, I guess, where is. And
I think that's very interesting, because it's important to say the amount of time it takes, and the amount of time we've taken to get to where we are. When we had our first AGM, we had nothing on the ground, literally. Nothing on the ground. And I think it was a revelation to take all the stockbrokers to the site last year to actually see what we have built. We're planning another visit in the next month, and there's been a great amount of interest in that, in terms of people just seeing the amount of infrastructure we've actually put in place, because it's not generally in the public domain. But I think that's very important when people see the amount of infrastructure we've built.
Do you want to tell us how much because I want to get to the ARPN acquisition now from Toleram, right? And do you want to tell us what the cost is to acquire this thing? Because how much of this?
And so that was also in the prospectus.
It was
very clear in the prospectus.
Okay, so. What folks want to know now is
the number is in the public domain. We're not hiding it. It's 155 billion naira.
How much?
155 billion naira.
Okay, so 155. What is the
acquisition cost?
Acquisition cost plus extras, right?
No extra. That's the acquisition
cost.
That's it. Okay. Very clearly outlined in the prospectus. And I think it's important to say these things because, one, I can talk about it because it is in the public domain. With our presentations and everything. It's 22,000 hectares of land. It takes us to number 3 on the listed markets, just after Okomo and Presco. It's generating a significant amount of revenue already. So what we said throughout it is significantly cash accretive. It multiplies our revenue by almost 70.
Is that site? But has anything planted on that yet?
Of course, it has 11,000 hectares of.
Okay, so the thing is, Chuka, and going to the
trees which are generating revenue.
So how much of that? How much of that impact will we see on the financials? Because again, this is going to December now, right? So you did have an operating loss of 1.8 billion. And again, you've laid this out, right? You've laid it.
Yeah.
How How patient should investors be that this acquisition and maybe others will turn the figures around?
I don't want to say maybe others because there's a variety of things in the pipeline. Like I said, forward-looking statements I can't make on television.
Of course.
It has to be through the exchange. So I think even say news of the abortment of the offer, we had to make an official statement through the Nigerian Stock Exchange.
Of course, yeah.
I think in the very short to medium term, we'll be making official statements that give a lot more color and a lot more detail on the specifics of the numbers.
Yeah.
And I think it's interesting that a lot of people didn't seem to have, well, outside the institutional investors and the people who actually did invest, read the prospectus and understand the scale of how transformational this transaction is to us. And I think it's pretty significant. As I said, it takes us to number 3 on the list of market after Presco and Okomu. But it's important to note it's value accretive. It's we're bolting on the acquisition to our current.
Okay, Chuka, consistent audited financials. So because if I went to the website, right?
We're listed on the main board of the Nigerian Stock Exchange. So all you have to do is click, and you can get our financials for the last 5 years.
All audited.
We're on the main board.
I know. I get you.
It's the point I made about people who blog.
I know,
without
but I went.
checking
on your investor relations website, and maybe you talk to your folks there because I know I can go to the NGX and because that's where we pulled these figures from, right? But I think it's also important because another thing that's been put out there is that listen, you should have a human being for investor relations that should be ready to be answering questions. I know it's maybe not an AI or a robot, but improving investor relations transparency, being able to go to a company website, pull up all these financials, not having to. What's your, because that's another concern that's been brought up.
It's very, very valid.
Right.
In the early days, it was not necessary. We had 10 staff, small land.
Yeah.
We've scaled up significantly. We've planted a great deal. We've put in a mill. We're now generating revenue. So we have now retained investor relations. But investor relations comes at a cost. We have Verdi Investor Relations, who are now our investor relations company. But we're now at the stage where we should be using investor relations companies. But 2 years ago, 3 years ago, I think it would have been I don't want to say overkill, but in terms of what we wanted to spend our financing on, it was operational stuff. It was planting seedlings.
I get you, but you can see the importance of having that so that investors can. I get you. I get where you're coming from, but you understand. Look, I'm just representing the feedback. I'm just giving you the feedback that was coming up from out there. So you think maybe going forward, since you're saying now you're going to be...
we have retained, we have an investor relations firm, Verdi Investor Relations, and I think they're now engaging with our institutional investors and our potential investors. And it was very important eventually to get an investor relations company on board, which we've done. So, but I think, like I said, legitimate concerns and legitimate questions, we're always happy to deal with and take those suggestions on board. So. Okay,
finally, because we're running out of time here, you did put this in your FAQ, and I want to read it out because it seems that this whole conversation is you telling investors have patience. You said here, agriculture is a long cycle sector and value creation is realized progressively as investments translate into measurable performance outcomes. So I guess as maybe your final message to investors is just people just need to understand that with oil palm and everything else, it takes time.
I think with the long-term investors who we've been engaging with over the last couple of months, who have been in for the long haul, and they understand when 3 years ago we had 0 and to where we are now, which is fairly significant from that start. So we're very comfortable with them. They're very comfortable with us, and we're confident about the medium term. 3 years ago, I said long-term future. Now I'm saying medium-term future. And I'll soon be saying short-term future because we expect to have significant growth very soon.
Chuka Mordi, I thank you for coming on the show, right? There are not many CEOs that will come and address, growth, the hurdles that you go through when trying to build a business. But, I thank you very much for coming on the show and addressing this and talk to us again. And this is a long-term thing. So I guess agriculture is not easy, right? So thanks so much, MD CEO, Ellah Lakes PLC. Thanks for joining us.
Thank you.